Hello, I'm Hickey from Interest.co.nz and welcome to our monthly report on home loan affordability, brought to you in association with Roost Mortgage brokers. This month we look at November, what's happening with house prices, with interest rates, with incomes, and what that means for home loan affordability. The Roost Home Loan Affordability reports, which are done not just nationally but across the various regions in the country, and you can find it in links in the article below this video, show you how much of your disposable income you need to service a typical home loan on a typical home. So it gives you an idea of what comes out the other end after you've put in house prices, interest rates and incomes. And in November we saw another deterioration in home loan affordability. That's because of a sharp rise in median house prices across the country, particularly in Auckland. For the nation, it means now that you need 55.3% of the median disposable after-tax income to service an 80% mortgage on a median-priced house. That's up from 54.9% in October. It's actually the worst we've seen it since November 2010. Now that's all about the move higher in house prices. In fact, a record high median house price nationally in November. Now there has been a slight fall in November in the average 6-month and 1-year mortgage rates, fixed rate mortgage rates, and a very slight increase in income. So some of that increase in house prices has been offset by slightly lower interest rates and a slight increase in incomes. But on the whole, it hasn't been enough, and home loan affordability has deteriorated across most of the country. However, it's not a uniform picture, and you can dig down into the various regions where you live or where you're thinking of buying in the various home loan affordability reports from Roost Mortgage brokers. And it shows a varied picture. For example, Auckland is of course the most expensive part of the country. Now overall for the region, it takes 74.1% of your take-home pay for one median income to afford a median-priced house in Auckland. Remember, that shot to a new record high in November. For central Auckland, it's even worse. 85.1% of disposable income to afford a median price mortgage. But go somewhere else, for example, the Manawatu, and you're looking at a median house, costing 35% of your disposable income. And Wanganui is the place to be if you're looking for affordable housing. That's the cheapest place in the country. 27.9% is what you'll pay of your disposable income to afford a median price there. There's a couple of reasons for that. Populations are falling in regional New Zealand. A lot of younger people are leaving. That means there's plenty of empty houses. That pushes down house prices. Whereas incomes, they're lower than in the big cities, but not that much lower. So housing supply is a big issue. And obviously in Auckland, we're only building around about 4,000 houses a year when we need about 12 to 15,000 houses to keep up with migration and income and population growth. So what are we looking at for the next few months with home loan affordability? Again, it's all about house prices and interest rates. Interest rates for the 6-month and 1-year term deposit rates, let's have a look at those now. When you look at what's happened to mortgage rates, let's have a look at the 2-year average fixed rate. That's obviously come down a lot in the last 4 years or so. Right from up here, or you might remember back in the good old days, or the bad old days, depending on who you are, April 2008, up there at 9.6%. Of course, it's kept dropping through the years, and at the moment we're at those record lows of about 5.3% for the advertised 2-year rate. You probably get something better if you have a go with your banker. For the 6 months, which is what a lot of people are choosing at the moment, there has actually been a blip up in the average rate through December. That's because some of the special deals on offer from various banks have been pulled in the last couple of weeks. So we've seen a blip up in the average rate in December. And that's the same too in the 1-year mortgage rate, a blip up there from a low of 5.2 up to 5.3%. Floating rates, of course, and about 60% of people are on floating rates. They'll be as flat as a pancake since the official cash rate was cut back in early March 2011, of course, just after the Christchurch earthquake. And of course, down from those record highs of 10.6% back in September 2008. The outlook, well, it's all about Graham Wheeler, the new Reserve Bank governor. If you look at the economy, it is flat on its back, inflation well under control. In fact, below 1% at the moment, and he's supposed to target 2%, so in theory he should be cutting interest rates. But we have a fairly strong housing market, and the Reserve Bank is worried that this could feed through into inflationary pressures in the rest of the economy, as it did from 2002 to 2008, so it's watching it closely. And we should too, because the bigger that housing boom, the more pressure there will be on interest rates and for Graham Wheeler to put it up. However, the strong New Zealand dollar is keeping some of the inflation pressure off, and that's keeping inflation and interest rates down. So there we have it. The general outlook on home loan affordability is slight deterioration in November, the worst since November 2010, but we're not back at the very, very painful levels of late 2007-8 when those interest rates were around 10%. I'm Bernard Hickey. That was a special monthly home loan affordability report brought to you from interest.co.nz and our sponsors, Roost Mortgage Brokers.